Jeff, Zach, thanks for joining me.
Hey, Steve.
Hey, we are talking today about the manufacturing revival in America and how that's actually impacting real estate, and including like you've got the 65 billion Taiwan semiconductor manufacturing plant going up outside of Phoenix, which is attracting a lot of developers around that area. You've got other areas in the Sunbelt and even in the Rust Belt where you've now got major plants and facilities starting to go up as we start reshoring and building up some manufacturing in the US that didn't used to be here. It looks like a durable trend, and developers are certainly paying attention to it, and it's creating some seems to be creating some opportunities. Some of your thoughts as we see some of this like 11 billion in the Chips and Science Act get deployed in subsidies and loans to encourage such development.
Go ahead. Yeah. Well, no, go ahead. I mean, look, I'll just look with the reality is we have a tenant in one of our buildings that is one of these kind of EV companies that it's a major supplier, and it's impacted that area greatly. It's added housing, had added jobs, added ancillary businesses to the local market. It's interesting. Is it a lasting permanent trend? Who knows? We'll see. We'll see what the government says and how they want to tax people and manufacturing and everything else. But it is good for some of those areas, and it's probably good for the United States as a whole. But I guess I'll pull up, see if I can find my crystal ball to see what really happens.
Well, I mean, when you look at that development in certain areas, that means there's other areas where it's pulling from too.
Yeah.
So what's good in some areas is bad in others. I think it's more of a sideways trend because a lot of cash is still sitting on the sidelines with interest rates and otherwise. What you're seeing is probably relocation from business restrictive policy to business encouraging policy. So, Sunbelt, Rust Belt, Texas, Southeast, Florida, you've got a lot of areas that are very pro-business. And, in these tougher times, it's easier to say drop $10 billion, build a new plant because the savings on your taxes are going to be, 3 to 5 billion a year. You're going to move, you're going to deploy that capital. But
Sure.
I think from where I'm sitting, it's more a little bit artificial. I think it's a sideways move because I still haven't seen kind of like the floodgates of capital coming back into the market yet.
Yeah, I would agree that it kind of goes to what we've been talking about. Some areas benefit, some areas lose in real estate just naturally in the market. And I do think this is going to be a durable trend, partly just because you look at the demographics of China, and they just don't have the workers. The one child policy, urbanization, other things. The decoupling from China is a real thing, and it's a real thing because they just quite simply don't have the workers. So I think you are going to continue to see some plant get developed in the U.S. The problem for the US is we also don't have the workers. If you take a look at the TSMC plant, it's already well behind schedule. They're having trouble getting the construction guys. They're having trouble training employees and getting them up. Um, we've got a better demographic situation than China. So I do think you're going to continue to see this move forward. But we've also got shortages of trained workers. So I think it's not going to be a slam dunk gold rush. It's going to be kind of fits and starts, and you're going to have to do what we always do with projects. You're going to have to do your due diligence. I mean, you can't just go with what it says on the front of the brochure. You're going to have to look into the area and be like, can they pull this off? Is it going to get delayed? Is
Well,
this
I think
plant
there's
going to,
another underlying
Mhm.
side to that as well. Like how much of these plants are going to be automated, and there really isn't going to be as many workers as people tend to believe there might be out of it. May not need the the people who are quote unquote qualified to do the job because all they're really doing is pushing a button to get the robot moving.
Well, I think in the case of, say, a TSMC plant, you definitely need people despite the automation. But when you take a look at a data center, and that's a perfect example of what you're talking about, Jeff. A lot of people to build it, not too many people to run it. And I do think your more high labor intensive, low cost stuff is going to end up in Mexico. Um, and you're going to put some of the higher value stuff in the US, and you're going to have an integrated supply chain that we already kind of have building. But that goes to the due diligence because what you're, I mean, a data center physics, what you're saying perfectly. It doesn't take that many people to run after you got it built. And there's definitely going to be elements of that with high automation mixes in this. You got to do your due diligence.
Yeah.
Yeah.
Okay, well, I think we'll be talking about this trend for a while, but I think it is another reason why we like the Sun Belt. Maybe have some hope for the Rust Belt, and I think it's going to be interesting. I think we've in the post-COVID era, we've got some real trends going that have some legs to them, and it's not just about remote work. Hey, give us some comments on what you think we missed. Give us a thumbs up for the video, and subscribe on our website, selectfincap.com, to our free newsletter where you can get a look at exclusive commercial real estate investment opportunities. Some of them probably in the Sun Belt, maybe the Rust Belt. We'll see. Thanks a lot, guys.
Thanks.
Thanks.